Very positive numbers, and we really have to understand the drivers and how sustainable they are. So I understand that, especially on the revenue side, a lot is linked to your power business. Tell us more.
Well, the last time we spoke, I told you that we're doing a lot of things in the power space.
Yeah.
Part of that is trying to see how we can ramp up capacity over time. And we've been able to move that up to where we are today. Available capacity is about 701 megawatts. This was like, compared to last year, about 500 megawatts. We plan to ramp this up even further through the course of the year. We've sustained that. We've also tried to maintain and upgrade what we have as our turbines. We've also deliberately tried to oil relationships that we have around the power space to ensure that we don't have any kind of challenges along the way. So these ultimately have made us produce and generate reasonable capacity to the national grid. In fact, in the past 3 months, or the first quarter of this year, Transcorp Power has been #1 in terms of contribution to the national grid, averaging close to about 14.5% contribution to the national grid. So that policy we intend to sustain. The strategy we intend to focus more on all those things that have won us the levers. And I believe that is sustainable through the course of the year.
But the big challenge, I think, in the power space is liquidity. And we know that has been a big issue. Has that improved for the power generating companies? What are
it has in some ways. Like, you have the new debts, you have the legacy debts. In terms of the legacy debts, not much has been done in that space. What we've tried to do, or the board and the management to try to do, is to play a lot of advocacy in that space to see how we can unlock liquidity from that space, either in terms of promissory notes or bonds that we can swap with that debt, or in terms of seeing what government can do in terms of staggered payments in that area. We're positive that in terms of what we've presented to government, they will come up with something that makes sense because it's a large portfolio. But the current debts, they are servicing. Not as quickly as they should, but at least there's a huge improvement relative to before.
Right, okay. And obviously that's crucial for your cash flow management. But let's talk about the hotel business, which has always been a bright spot. We know there was a renovation program going on. Can you just tell us where we are with that and what's the likely impact?
Well, the upgrade has been on till now. We expect we should finalize on that by July. We are very positive that we would achieve that. It's $100 million upgrade. It's a lot, especially in this kind of economy. Have you been to the hotel?
Oh, absolutely.
Okay. The ambience, the environment, what do you see about
it? I certainly see the signs of the upgrade.
So,
but the big question is, when is it going to be completed, and what's that likely to mean for occupancy rates and so forth?
Well, occupancy rate definitely will improve relative to what it is now, because some of the rooms are not yet released. Secondly, we expect to finish by July, max. Both internal, external, and then we begin to optimize the occupancy in the place.
Okay, so let's talk a bit about what to expect group-wide in terms of performance over the rest of this year. So it's been a very solid start, and many will ask whether or not it's sustainable.
It is absolutely sustainable.
Why should we expect that this will be sustainable?
Okay, it is absolutely sustainable. In the power space, we believe we'll even surpass what we've achieved in the first quarter.
Because you produce more power?
Yes, we'll do. Definitely do. We are not giving any chances to upgrades. We're not giving any chances to the maintenance of our turbines, so we believe we'll perform excellently well in that space. In the hospitality business, we've been constrained by a couple of the rooms that have not been released. Now there's light at the end of the tunnel, because the upgrade is almost going to be finished. By July, we should have all the rooms released. Right. So we expect to optimize on the occupancy from that. Okay. So positively, in the next few months, things will even get better than it was in the first quarter.
All right. What about the other aspect of your business which really hasn't taken off, which is the oil and gas? What can you tell us about?
Well, a lot is happening in that space. We have some partnership we're discussing with in that area. We are also re-engaging the regulatory authorities in terms of trying to get some regulatory approvals. And we expect that in the third, fourth quarter, we should be able to have a solid work program that will lead us into very good prospects in the first quarter of 2019.
And agriculture, we know you've also...
Well, agriculture, the last time we spoke, I told you we're trying to downplay that place in that space because of a couple of challenges we've had. Don't forget it's located in Benue.
Yes.
You know the insecurity issues we have in that area.
Sure.
But
aren't you looking to look elsewhere across the value chain for agriculture?
We are.
Beyond
We are.
We are.
As we identify those opportunities, we'll hone on into it.
Right. Okay. All right. Maybe final point will be on your financing, because given the cash flow issues relating to this debt, the big question is how is this likely to impact your financing costs? What are your expectations? How is that likely to play out this year?
Well, if you look at our financing costs, it's not been like there's been no material difference in terms of what it is relative to what it was previously. And secondly, we've been able to manage that over time. And we expect that it can only get better now because we have gone through the phases of the upgrade. We've borrowed, we've done that, but now it's to now begin to streamline that cost, which we've done very well in the past few quarters.
Later on the program, I'm going to be talking about the power sector, and we hear about this intermittent system collapses and so forth. Are you a bit insulated from that in terms of the structure of your business? As long as you provide the power, you get paid. How does that work for you?
Well, usually you have this system collapses, but fortunately for us in Transcorp, we've not been hung into it. The last time there was a system collapse that affected the line in Benin and all that, we were kind of insulated from it. Not by any reason, but the fact that it just didn't affect our plant. It does happen. Aside from that, you also have the challenges of stranded capacity. The fact that you produce, you can't even deliver. You can't transmit it out because it's rejected. These challenges are there. We have kind of found a way around about these challenges, and it's something that we intend to keep doing in the course of the year to ensure that it doesn't limit us.